So let's talk about other developments in the world of oil and gas. I'm being joined on the program by Ibrahim Babalola, who's an investment analyst with AfriInvest. Good morning to you, Ibrahim. Thank you so much for joining us on the program.
Good morning, Harriet.
So one of the biggest issues in the news right now is, well, it's been in the news for quite some time, but it's trending again, is the story around the NATI report on the NNPC and its subsidiary, the MPDC. What do you make of this report?
I think the report covers some of the challenges in the sector, particularly with remittances by the NNPC and its subsidiaries. The NATI is claiming that the NNPC is owing, through the MPDC of course, is owing or has outstanding remittances of over $20 billion that hasn't been remitted into the federation accounts, and of course that's a lot of money. So the report is, highlighting that one, and then also the undervaluation of some of the oil mining licenses that were transferred from the NNPC to the MPDC. I think one of the examples was the Shell joint venture, which was valued at $1.8 billion. When the transfer was done, and PwC valued the same asset at over $3.4 billion. So there's a bit of disparity within the valuation. So the NATI is recommending that the federal government should, first and foremost, try to recover the outstanding remittances from NNPC and MPDC and sort of use it to fund the economic recovery.
And there's been public hearings on that. So I know that very recently the House of Representatives actually, ad hoc committee actually, talked about this and asked the NNPC to come and brief it on those discrepancies between the balancing of the the monies, and it's supposed to come span between 2011 and 2014. So it just seems as if there's so many reports out there in the open, but how quickly do you think that something will be done in terms of either punishing or getting them to return these monies to government coffers if they're sitting anywhere?
Well, I think the NNPC has to come and sort of say its side of the story and say, okay, this is the present reality, and this is what's actually going on. But for recoveries or punishment, this administration is a very serious administration. Particularly with sort of revamping and overhauling some of these agencies, particularly the NNPC and the oil and gas sector itself. So, in the short term, I believe that in the short term, the NNPC would probably issue a statement on the remittances and the valuations of these assets. In the short term, of course, our position has always been for the government to sort of sell off some of its stake in the JVs or list them on the exchange, which would of course improve corporate governance of these joint venture agreements, of course.
But then beyond the issue of unremitted monies, there are issues of transparency and efficiency with the operations of the MPDC, for instance. Now, what are your thoughts on this?
I think it goes beyond the MPDC. It's probably the NNPC. But as NATI has said, there's been improvements over the last couple of years. The present petroleum Minister of State for Petroleum has come and overhaul the NNPC. Create new subsidiaries to try to sort of micromanage these agencies. But that said, you can't take away the fact that there's sort of been a lot of lack of accountability in the operations of the NNPC. The NNPC has always been the target when people are talking about government agency that lacks accountability. But there's been improvements over the last couple of years, and I'm sure we'll continue to see improvements in the operations of the NNPC and the subsidiaries.
Let's talk a little bit of a global now. Oil prices have been above $50 per barrel for some time. How soon do you think the shale threat, which seems to be looming in everybody's faces, will be, will maybe crystallize? Do you think we should begin to worry about it?
Should we begin to worry? I think the answer to that question would be what happens on May 25, right? So the OPEC will be meeting to discuss the renewal of the oil freeze agreements. The oil freeze agreement has a 6-month term, which would expire in June. So the meeting in May, I think on May 25, to discuss this. If for any reason they're not able to extend the tenure of this agreement, then we may begin to worry. The U.S. continues to pump up its shale production. We're discussing it year on year, at the end of March, the drilling rigs for shale production had increased by over 300 units to over 800 units in the U.S. That's to sort of show the seriousness with which the U.S. is going to pump up shale production. And you also have shale production from Canada as well. The problem, some of the bottlenecks in the renewal of this agreement might be from the non-OPEC members, particularly Russia.
Why?
I was reading reports recently that Russia has been meeting with local oil companies in Russia, to sort of discuss if it should renew its position in the oil agreement. Russia was supposed to cut about 300,000 barrels per day, but from available data, Russia is only cutting about 130,000 barrels per day. And when you look at it historically, this is when these types of agreements when they tried to have this type of agreement, I think in 2000, when Russia was supposed to cut along with Saudi Arabia went ahead to cut, Russia didn't cut. So I think it's the first time that Russia is actually cutting.
Yes, it seems as if everybody is, actually agreeing and abiding by that production cut, given by OPEC. But if, for instance, at its May meeting, it is decided that they're going to continue with the freeze production, particularly for, Nigeria was exempt, as well as Iran and I think Libya. I can't remember the third country. Yes. So if it goes ahead and says, okay, so we continue with this production freeze, how do you think the market is going to react?
I think oil prices will remain stable above the $50 per barrel, because as long as the freeze agreement is extended, OPEC's oil exports accounts for about 60% of total petroleum traded, globally. So OPEC actually has a significant market share when you look at the global oil traded, of course. Again, fingers crossed on the extension of the tenure and the agreements by all parties. They might decide to look at Nigeria and say, okay, the militants in Niger Delta sort of subsided a little bit. Maybe we shouldn't exempt you guys anymore. So these are the key issues that may lead to some disagreements.
And do you think that at any time none of these countries are going to challenge, what OPEC stands for and say, hey, OPEC, we really do not want you to be lord and master over us and determine what it is that we're supposed to be putting on the table? Would rather do it on our own. Do you think at any time OPEC might begin to lose the kind of hold it has on some of the non-OPEC countries, for instance?
Well, for the OPEC members, it's not like there's a dictatorship. They all have to come together and sit and discuss. Sometimes
they're sitting together on the table, and some people prefer to eat rice, some people prefer to eat beans, and some people prefer not to even sit at the table at all.
Because
because
some people have greater market share than some people. Of course, if you have a larger market share, you probably have a louder voice. For the non-OPEC members, OPEC doesn't necessarily have a hold on them, but a higher oil price will benefit all parties, OPEC and non-OPEC members. So continue the freeze agreements will be beneficial for the markets, particularly when you think about the increased shale production by the U.S.
But in the very short term, what's your outlook for the oil market? We're seeing oil prices hovering between $56, $55, $54 per barrel. And even with the threat of having more oil rigs from the U.S. coming up in terms of shale production, it still looks like the market is going to remain bullish, at least for now.
Well, I mean, it's been because of the supply cuts. When Saudi Arabia and Iran, all these big players haven't necessarily been even pumping up to the agreed the allowed quota. They're not even doing up to what they're allowed to do. So we have a bit of reduced supply, which is helping the prices in the market, of course. On a shorter term, I think that May is a bit of a short term. We're already in April, so the decisions at that meeting would determine the direction of oil prices on the short term.
Ibrahim Babalola, investment analyst with AfriInvest. Thank you so much for your perspectives this morning.
Thank you, Harry, for having me.
Business Morning continues after now. Stay with us.